Now, the Q2 earnings of NIO just dropped, and boy, I must say, pre-market, it's quite volatile. I mean, since the report came out, honestly, I could not help but go and check how pre-market NIO is doing. It's going up and down. The volatility, it's on another level. Sometimes it's up 2%, 3%, and the next minute you'll see it down 2% or 3%. I mean, as I'm doing this video right now, pre-market NIO is up 2%, which shows that, look, the market has got mixed reactions on the earnings, but I must say there is more good than the tiny little bad news that we saw. I mean, one thing that we discussed obviously is that what is important is to, on these earnings, is to see that net losses are coming down, which indeed they came down, is to see NIO getting closer and closer to breaking even when it comes to the earnings per share. We are coming down, which that is good, and the cash at hand, which obviously there is a lot that we can say about. We will dig deep into that, but before we go in and have a look at what NIO reported and the guidance which they gave, because the guidance, you will know that it's also very, very important, and as it shows us now, or as we now officially know, the total number of deliveries that NIO is expecting to deliver right now in September. Now, before we dig deep into the Q4 earnings, please like this video, subscribe if you have not done so, because on this channel I give you NIO's latest developments, and as I've said yesterday, today I want to give you the latest developments of the NIO Q2 earnings as they come. You will know that these are just the results. The live Q earnings call, it's still underway, where we are going to see the CEO responding to some of these big financial institutions like Deutsche Bank, Morgan Stanley, and the others who have got access to asking those the questions about NIO's future or NIO's growth, the potential that lies ahead. We'll still cover that, but on this one, let's cover the actual report that NIO just dropped as I'm doing this video. Without wasting any more of your time, you will notice that NIO, when it comes to the total revenues that they generated total revenues of around $2.65 billion. This is the total revenues that NIO reported, which represent a 9% increase from the second quarter revenues they reported or generated back in 2024, but a 57.9% increase from the revenues that NIO generated in Q1, right? This is something that is very great, because seeing revenue increase is always something that is good, and it shows it's a very good sign or indicator of saying that things are improving, right? The second thing, from these $2.6 billion, $2.25 billion were the revenues that were generated by the vehicle sales. And this, again, it was a 2.9 increase from the second quarter of last year, and a 62.3% from the first quarter of this year. This, of course, was mainly due, or this increase was mainly due to the, of course, deliveries that we saw in quarter two, which is something that is pretty exciting. Now, something that I want to highlight, which also compromised the total revenues that NIO, or the 2.65 revenues that NIO generated, the other sales. The other sales, remember, this is where you get the parts that NIO is fitting onto their cars. This is where you get battery swapping fees or revenues that NIO generates from their chargers that are out there that are deployed. And over and above, this is the fees, or this is the revenues that consist of also the battery swap services that the users pay together with their battery rentals that they pay on to NIO, right? This is where it come to play, right? I mean, have a look at the figure. NIO in the second quarter, the other sales represented, or that NIO generated, were around $401 million, 62% increase year, 62% increase year over year, and a 37.1% increase from the first quarter of 2025. Now, have a look at something. NIO, since its existence, maybe you will prove me wrong, it has never went over, or the other sales has never went over $400 million. This is the very first time we're seeing other sales going over $400 million. And it's just the beginning, and it is something that shows us that very, very soon we will be seeing other sales going over $1 billion because of what we are seeing on NIO, because of the battery swapping services that the users will be paying, because of the charging infrastructure. You will know that when you talk about battery swapping services, NIO has pulled back or dropped back right now in Q3 in terms of the incentives that they give or of free battery swaps to those that buy NIO with a battery as a service. They've pulled back a bit on those kind of incentives, and knowing that it happened now in Q3, it makes me to look forward to the Q3 earnings, because this revenue could or this figure could go over $500 million, but we are not yet there. Anyways, like I said, this was an all-time high in terms of the revenues that they generated from other sales or non-EV sales, which is obviously good. There are also things like lifestyle products which also contribute to this, because you will know that NIO are not selling just only cars, but there are also lifestyle products that they sell, like your hiking equipment and all that. You can buy it on NIO, and that revenue comes on these other sales that we are seeing here. Now, going to the gross margins. Gross margins for NIO came at 10% on the dot. The gross margins for quarter two for NIO came at 10%. So it's a double digits, which is always something that is good, because you will know now the magic number or the magic figure that NIO want to see themselves sitting at when they get to profitability. They want gross margins to be around 17-18%, meaning that NIO is just 7% away from hitting their target, that hopefully they get to reach it in Q4 of getting their gross margins to 17%. When they get to that, we know that obviously profitability will be coming, of course, with them also going, which that goes hand in hand with them managing their R&Ds or their expenses that comes when running this company. Now that 10% is better compared to the second quarter of 2024 gross margin of 9.7%, and the first quarter gross margin of 7.6%. The gross margin remains stable compared to the second quarter of 2024. This gross margin increase, as NIO is saying, it was mainly attributed to positive mix of driven by increase in revenue from used cars and technical research and development services. This is what led into the gross margins increasing or improving. Now, vehicle margins, right? Vehicle margins was at 10.3% compared to vehicle margins of 12.2% last year and a 10.2% from the first quarter. Now, take cognizance of the fact that vehicle margin, though sometimes it's either low or it can be higher than the actual gross margins, it does not control the overall gross margins. Vehicle margins, it can be high, it can be low, but the gross margins can still come pretty solid. We saw that even from Xpeng's Q2 earnings, right? I think their vehicle margins was at 10%, but their gross profit margin was around, or their gross margins were almost at 15%, plus minus around there. So this is the vehicle, or 10.3% was the vehicle margin for NIO that they reported in quarter two. Now, research and development, operating expenses. Research and development, NIO spent around $419 million in quarter two, representing a 6.6% decrease from second quarter of last year and a decrease of 5.5% from the first quarter of this year. Now, selling and administrative expenses, NIO generated also a $553 million, representing an increase of 5.5% and a decrease of 9.9% from the first quarter. The 5.5% is an increase from the quarter two of last year, but a 9.9% is a decrease from the first quarter of this year. You will know that when it comes to selling and general administrative expenses, we read that NIO in the second quarter there was a point in time where they cut down on employees, but right now, because of factory number 3, there are rumors that are saying NIO is currently busy on a hiring spree for their third factory. But anyways, let's continue so that this video that does not become too long. Now, the loss from operations was around 685.2 million, representing a decrease of 5.8% from the second quarter and a decrease of 23.5% from the first quarter. Now, let's go to the net loss and earnings per share, right? Now, net loss. Remember, for quarter one and quarter four, net losses for NIO were coming at almost $1 billion, almost over $900 million. And this was a serious problem or a concern to the investors of NIO. But as seen on the screen there, you will notice that in the second quarter, the net losses were around 697.2 million, representing a decrease of 1% from the second quarter of last year and a decrease of 26%. So NIO reduced their net losses by 26%. Net losses came down by 26%, which is something that is very, very good, which shows that indeed the strategy, the CBU, Cell Business Unit that NIO is implementing, it is working, and hopefully it continues working and NIO continues seeing their net losses coming down. This is always a good sign to say that, look, things are improving, which is why I say these earnings are not as bad. Now, earnings per share, basic and diluted net loss per ordinary share. Earnings per share, NIO basic and diluted net loss per share were both at 25 cents, right? Compared to obviously 25 cents or 1.85 RNB compared to the 2.21 RNB in the second quarter. This is something that is very great because obviously things are improving, man. Things are really improving because earnings per share was around 31 cents in Q1, and right now we are seeing earnings per share sitting. I mean, earnings per share last year in quarter two was at 31 cents. I think in Q2 earnings per share was over 30 cents, and now seeing earnings per share at 25 cents, it means that it is going closer and closer to break even, which is something that it's just so amazing. Now, coming to the cash at hand, right? The cash and cash equivalent. The balance sheet of NIO is currently sitting at $3.8 billion. Or they talk about the fact that they've been incurring losses since the beginning, and these $3.8 billion, they said that we believe that our financial resources, including our available cash and cash equivalent, restricted cash and short-term investments, cash generated from operating activities, and funds from available credit quotas and other sources will be sufficient to support continuous operation in the ordinary course of business for the next 12 months. This is what NIO said, right? Now, going to the guidance. We are almost done, guys. Going to the guidance, which is very important. NIO gave a guidance of between 87 and 91,000 deliveries for quarter three, or for the entire quarter three, representing a 40.7% to 47.1% from the same quarter in 2024. This is what it represents. Revenue-wise, for the very first time, NIO is expecting to go over $3 billion in terms of the revenues that they generate. It's $3 billion to $3.19 billion, representing a 16.8 to 22.5% from the same quarter in 2024. These are the earnings in summary, but obviously something very, very good, that if you want to take away something, even if it's NIO throw that statement also into their earnings, if there's something to take away from, is number one, the net losses are coming down. It's a good sign. Number two, the earnings per share, it's getting also closer and closer to zero, which is a good thing. But I must say, the rate at which it's coming down, I suppose it is not as what we expected, right? I mean, the earnings per share of XPeng, if my memory serves me well, it came at negative 10 cents, meaning that chances are very high that XPeng will get to profitability before NIO. Who knows, XPeng in Q3 could reach profitability. But anyways, we are not yet there. But for NIO, I think Q4, it is the quarter that we might only see profitability. Q3, it might go below 20 cents, but in Q4 I think it's possible to see profitability coming from NIO. In fact, they said, or NIO said, starting from the second quarter, our comprehensive cost reduction and efficiency improvement initiatives have started to yield results, excluding organizational optimization. Our non-GAAP profit loss improved by over 30%, added the chief financial officer of NIO. We are now approaching a structural inflection point in our financials, with positive momentum building towards sustainable vicious cycle and continued performance improvements. This, in summary, wraps up the NIO Q2 earnings. So from the guidance that they gave of 87 and 90, 1,000, it simply means that they are expecting to deliver vehicles of between, when you subtract the 21,000, the 31,000 that NIO generated in July and August, from this 87 to 91,000, you'll notice that you get a range of between 34 to 38,000 deliveries that NIO is expecting to generate right now in September. So NIO is expecting an all-time high again. We won't get to 40,000, but they are expecting to at least get to 34 to 38,000 deliveries this month, which is something that is great, something that is exciting, and it makes me to look forward to what is coming. Like I said, the Q2 earnings call is underway, and the juicy news, that's where they get to be dropped. Over and above this report, that's where we get the juicy news, which, like I said, I think we're going to hear a lot about the factory number 3, the delivery, the roadmap, the NIO day, maybe the start date of the delivery of the ES8. That's very important. We're going to see all these things unfolding, and hopefully they get to be so good in a way that the market can continue to positively react towards the earnings of NIO, right? I mean, right now, as I'm closing off this video, NIO share price is up 1.5%. But again, let's wait, let's see what transpires during the live earnings call, or Q2 live earnings call. Like this video, subscribe. I'll see you on the next one. That is all from me, my dear friends, and God bless you all.